And we are live. Hello, everybody. Good
You're freezing up, man.
morning. Happy Thursday morning. It is almost the weekend. Oh, are you freezing up a little bit, Mark? That could be my
You're
connection,
okay now.
so let
You're
me
okay now.
know.
Yeah.
Okay, cool. Yeah, just send me a text or something if I get too bad.
Okay.
We have new internet coming in a little bit, so we're getting that organized here. But yes, welcome to Thursday morning. It's been a great week of trading heading into the weekend here. We've got Apple earnings in 1 or 2 days, Mark.
The 28th, so that's today after market close, I think.
Gotcha. So we're getting those out of the way so that we can trade Apple with no sort of infringement. There's Tim. How's it going, Tim? Looks like you're muted. It's all good though. We're telling the people about
There we go.
Apple. There you go. Telling people about Apple earnings coming up, so we can trade it in an unfettered manner.
Yes. Yes.
Yeah, we're really looking forward to that.
Been a little crazy this week.
Lots of effects that we teach about on our MMT. Yeah, lots we teach about on our morning MMT session about the effects of earnings on stocks, things like that, how they affect day to day. But with me is Mr. Hooper, Mark, and Tim, who are our three main coaches on the micro moment trading. Hooper, how did it go?
Well, we've had.
How did it go this week? What style of trading do you guys do? What's your world look like right now?
Okay, well, the market hadn't been great this week. I mean, relative wise to what we normally do. Last week we were 180% up or something. Right now, as of today, we're through for the day. We're up 64.0074% for the week, which is really good. That was about 19.31 plus today and about 19.53 yesterday. And then whatever the day before was. So we're going to go over 100 for the week. It's good. It's just Mark can talk about it later. It's actually just a little slow, but for the folks out there, we have our micro moment trading class every morning when the market opens 8:30 Central Time to 9:30, and that's it. We're through for the day. We do an average like today. It was 6 trades. Yesterday there was only 5 trades. Sometimes we do maybe 13 trades, and we'll be up 50-60% in a day conservatively. And we do that every single day. And so we end up having these huge months, or weeks even, over 100% on average. So 400 or 500% a month on average. And we've been doing it as a subscription service for 129 weeks now. We've been doing it as in-house service for about 5.5 years. And these guys, Mark and Tim and Cezanne, actually do these trades. And you're participating in those trades by virtue of the fact that the charts are up. And there's one chart. And it's a proprietary chart we have. And they teach you how to use that chart. And you learn it really quickly, how to use that chart. And we're trading QQQs. Mark trades QQQ and Cezanne and Tim trade Apple. Those are the only 3 things they trade. A few folks trade SPY, and our class reflect or report to us what they're making on each trade, and they're making huge amounts every single day, and better a lot of times than we do. But you learn that stuff, and it's just the greatest way to make money on the face of the earth because you're never into a transaction for more than a few minutes. You're never into anything overnight or over the weekend. And so, and I think we even have some kind of 2-week free trial for that service on our website.
We do.
Micromomenttrading.com. Anyhow, that's about all I've got to say on that. Mark is our futures man. That's the new service that's just starting. You might bring everybody to date on that.
Yeah, so had some traffic today, email-wise, and looks like we're going to send out the email after market close today. That's going to start our futures trading, much like we do for micro moment trading, but in the morning for futures. Time should be 7:45 to 9:45. I'll be online monitoring before that. A lot of times it's about 6:30. Sometimes the market starts moving. Or in this case today, if you look back, you see the market started at 1:30, had a nice uptick, and then again at somewhere around 5:30, but I wasn't quite in front of my computer at that point, right? But so you can trade the markets 23 and a half hours. It shuts down in the evening around 4, opens back up at 5 Central Time.
Which we don't recommend.
Yeah, we don't recommend you trade 23 and a half hours. Usually in a couple hours a day, you can get what you want out of the market. For me, I look to gain about 50 points a day. So if you're doing one contract, that's $1,000. 10 contracts is $10,000, right? So there's a multiplier there. So I know the charting is available now on the Micro Moment Trading site. If you go into manage accounts, you can add it now to your current subscription. I think it is. I think it adds about $63 a month or something, and we don't make any money on that. But it'll give you the charts, so you have the charts, so you can trade before market hours or before we start the session or after the session or anytime during the day, right? And I kind of recommend that to everybody out there. But we're excited to get that going next week, so I can't wait.
Me too. I'll be joining you in the mornings.
Absolutely. There's one. Yeah, it's gonna be very exciting. There is one thing I want to explain about those charts is the amount of years that went into developing them, and the amount of money we actually make on them, which is about $5 a month. The cost of those charts is to connect you to the data streams, which are very expensive. But we want to make sure that your connection to that data is uninfringed by us. We have set up these charts, but the amount of benefit you get just for paying for the connection to the data and the expertise and the years. I mean, these charts have the core foundations. Joe, what year did these charts really start off? I know there's been some small adjustments, but the core concept of these charts.
Yeah. I think probably, and Mark can kind of confirm, it's probably about 4 years ago, Mark?
Yeah, for the Micro Moment Trading, we had the advanced charting, right? And this kind of morphed from that to this, right? We've adjusted the indicators, and so these are proprietary indicators, right? Upper indicators, lower indicators. Yeah. And so they're very, well thought out and developed and used over the years now that we're confident in their signals. So
yeah, at least 4 years.
Yeah.
So. Yeah, absolutely. Yeah, developed long before that, but taken into a shorter term. Again, we don't make money off of it. We just want you guys to connect that tool, right? And then we'll teach you about the tool.
Yeah, let me say one other thing before I forget it. On our Micro Moment Trading in the morning, right now, Mark and Tim and Cezanne say, okay, I'm entering QQQ at this price, and then I'm exiting. And usually it's within less than a minute. And of course, it's all vocal. And shortly, you'll be able to actually see the trade. You'll see the trade on the screen, not their statements, but you'll see the trade. So you'll see exactly precisely the enter. You'll see what they're buying for, what they're selling for, and what they get. And that's going to be huge. Nobody does that on the face of the earth. It's
right.
Going to be
in real time. So
real time,
the pressure's on, man. The pressure's on.
Yeah.
Well, now, Mark, are you still going to be on that morning session with Micro Moment? Or are you going to be doing during that time period the futures?
So there's an overlap, right? So if we start at 7:45 to 9:45 or 9:30 or so, there's about say 8:20 you guys normally start. So there's going to be an overlap. So probably not, I would say.
Okay.
But it's supposed to start a week from today. Carl's question here, and it's going to start at 7:45 is my understanding. I'll still be monitoring in the morning like I do now. I get up, and I start looking at it about 6 o'clock. But we're going to try this out for a couple of days, get it going, get the bugs worked out, get things working, make sure everybody's got their account set up so they can actually follow along and get it going. So
we're going to have to find Tim. We're going to find somebody to do the cues.
I know. I'm sad about this, that I'm losing Mark for 15 minutes. I don't know what to do about that.
About 30, 40 minutes, but
yeah. I don't know.
We got some things in the work for that.
Yeah, some things coming up. We'll show it. Yeah,
I believe. Yeah, lots of transitions and changes, but we're looking forward to it. And Mark, that I heard some rumors that it was going to be 2 days a week to start off and then go up to 5. Are you just starting with 5, or where did you decide?
Yeah, so it's going to start a week from today. The email is going to go out after market close today, and then we'll do those 2 days, Thursday, Friday, and then as long as things are in place and it seems like everybody's in sync with what's going on, we'll probably do at least a week, maybe 2 weeks that way, and then start the full 5-day week thing, Monday through Friday.
Fantastic. Yep. So yeah, a soft launch, and then we'll probably hype up the big launch for the full 5 days a week, the full classes, everything. When we make sure everything's super solid, super effective methods for you guys, we want it to be just rock solid, so that you guys can come in and execute on these processes. Right. It takes a long time to become a professional trader and understanding all those indicators and things like that. But you don't need to know what a Fibonacci sequence is to make money in the market. If you know how to read a specific set of indicators that is proven to make you profitable over time, you can execute on trades, make money without having to do everything it takes to become a professional trader.
And we'll utilize the charts, the same ones, like you're saying, utilize the same charts. And those charts have indicators that tell us when to get in, when to get out, basically. Mm-hmm. And that's what we utilize, right? And we're going to have some more rules around the futures a little bit. But yeah, you don't have to be an expert at all that stuff out there, right, in the market. Everybody tries to cram into their brain, right? We can narrow it down to something simple and small that everybody can digest. So.
Yeah, and I think that goes to the effectiveness of our ICE charts. Is so many of those technical indicators are already digested into our charts, so that you can literally just glance quickly at the charts and make a decision on a trade, at least on MMT. So, which is why we just have one rule, which is when that trade turns, get out. So we don't have to track, 100 different things while we're trading, because micro moment trading just moves too fast for you to analyze, thoroughly analyze the technicals in a trade. When you can glance at our charts within 2 seconds, can decide if this is a trade that I should be getting into. So, and I assume that will pretty much be the same with futures, with some added, variables to it. But, I think that's one of the cores of our success here, is that it's simple. The charts do the work. And once you learn how to read those charts, which do not take long at all, you can be a successful trader.
Okay, let me say one thing too, because there's a Carl asked a question: how smart returns on the QQQ today? He had 4 trades. He made 15.8000%. Yesterday was almost 14%. So those are huge returns on a daily basis just for the QQQ. And let me say one other thing, much to the relief of Micah and myself and Mark and Tim, whoever else writes editorial. When I had lunch with Dirk on Tuesday, I told him I was going to totally change that. We're not going to do the editorial anymore. It's been going over 20 years down the editorial. We're still going to have the primary thing of the Cal report is all of Randy's trades. And that's still going to be there, but we're going to replace editorial with each Friday off the website, an explanation of a particular service. This Friday, it will be the micro moment trading. And then next Friday, it'll be Tim's stuff. And then Mark's stuff. So that way, that email goes to thousands and thousands of people. And that way more people will see the specific things that we do versus just going to the website and maybe strolling through the website and seeing all the stuff we do. And particularly since with our new publicity program, we're going to have many new people, and that we really serve them versus having the same report with just Randy's stuff in an editorial, which, and besides that, the guys that write the editorials, Micah and Tim, they've become so radical lately.
Yeah,
and,
there you go.
Yeah, and I was concerned about that editorial becoming like some kind of warmonger thing, That's right. Yeah.
Yeah.
Yes, I tend to be a little bit on the radical side of our crew, fiscally and politically, I believe.
Yeah.
I mean, Joe's talking about all these changes that we're doing. So these changes are designed to help you, the trader. We want you to be successful. So we want to put this information out there
Yeah.
in a format, in a way that you can utilize it, follow along with us and be profitable and just stay with us, right? And that's our goal. So.
Absolutely. Hey, I want to tackle this question. Hi, Joe. What lights are you referring to when you say when the lights turn red and get out? This question comes up a lot. And what we're referring to is, depending on your platform, what platform you're using, this is simple. If you're following the tick, if you did a call and that tick turns down all of a sudden, get out. You can look at the tick. You can look at our E4. You can look at an underlying chart on your platform. There's any number of ways to look at it, but simply stated, if you follow the tick on the ice charts, and that tick moves in the opposite direction, that's really what we're referring to. And if you have a platform that actually has a green and red light, as most do, that's what Joe is referring to as well.
Yeah, it's the arrows, right? So our proprietary chart, these ISE charts, we call them ice charts, are a proprietary charting system, and they have these red and green arrows. And if it turns red, get out, right? Like Joe's talking about.
Yeah, and the reason you want to do it fast is when you see a thing turn red is because when you get out, you're going to get out. You just really went into the trade. You're going to get out and maybe lose a penny or two. If you just sit there hoping it's going to turn around and you're going to sit there all day or all month, whatever, you're going to lose 25, 30, 50 cents a dollar. Otherwise, you just get out and you take a loss of a penny or two. You still end up making your, astronomical returns.
So seconds becomes, dollars quickly.
Yes,
exactly.
Right. Seconds become dollars. Yeah, absolutely. And that's really the key. I mean, that's the absolute key to what we do at MMT. If you control your losses, and folks, there's going to be losses. We don't trade 100% wins. But if you control those losses to 1 to 3 cents, your winners will far, far outweigh those losses. So the trick here is to get those losses as low as possible, right? Because you can always jump back in. Everything looks good on the charts, right? It's all lined up, in sync, looking good. And then for some reason, something hits and it just instantly moves in the other direction. Get out of that trade. Right? If it corrects itself and continues moving in that direction as the indicators show, then jump back in. But don't wait. Just don't wait.
Yep. Decisiveness is severely rewarded. The other aspect of the red and green is one of the indicators on our chart is E4. It shows volume. So we trade on momentum, right? We talk about that all the time. We trade as speed, trade as the speed increases as it moves quickly. The only reason it does that is because a lot of people are piling onto that trade. So one amazing thing about those charts is we can see when all that piling starts to slow down, all the people that are coming in start to say, I'm not buying anymore, right before that move stops. So you can really see exactly what happens with that very powerful tool for sure.
Yeah,
hey,
for sure.
Hey, Micah, can you put up on your screen that Gary's comment? I'd like to answer that. Yeah, that's Absolutely. A good one. Yeah, Gary says you've talked about how a trader can start with a small account, and how do we get past the pattern day trader rules that I have specifically encountered with Thinkorswim? Okay, Gary. It's not the same thing. On our micro moment trading, we're going to trade for only a few seconds, maybe 15 or 20 or 30 seconds, if even that long. And we don't sit there and trade all day. A pattern day trader is sitting there all day trying to figure out if stocks are going up or down or what they're going to do. Too much information. Nobody can absorb all that stuff. And that's why, according to the CBOE out of Chicago, they lose 85% of their money. We don't do that. And as regards to a small account, and I've given this example many times, $2,000 in your account. All you're going to do is trade $2,000, one-time deposit $2,000, never put in another penny, and it's going to compound in 24 months of trading into about $500,000, $600,000, $800,000. That's because of compounding. So this is not in the definition of pattern day trading, you're not a day trader. You're only there for an hour, so you don't become a day trader.
Right.
And it's just in and out, and you're not trying to figure out stocks. We're using indexes. Indexes aren't going to go out of business. We treat Apple as an index. It's not going to go anywhere out of business. And so it's just life is just so simple. But there's no relation to pattern day trader. Pattern day trader is a death sentence as far as trading goes.
Thinkorswim does have this rule, so you do have to make sure you tell them you're going to trade cash only, not margin, and that'll resolve this issue, because there is a rule that will, if you do more than 3 trades, I think it is, Joe, or something in a day or something, they kind of lock you out if you're using margin. So unless you put a 25 grand in your account,
3 trades in
a week or something, or maybe
it's a 5-day rolling period.
5-day, that's it. Yeah.
And I think Gary, you can start off with a very small amount, like say $2,000, because we're not paying $100 and $200 for Apple or whatever QQQ costs. We're paying a fraction. Like Tim trades Apple today, he may spend $1.50, he may spend $1.75. I know Mark spent today $2.50, $2.04 on Qs. So this is ultimate leverage without the use of borrowed money. So
It's perfect.
that's why you don't need a lot of money. So
yeah, and we don't use margin in micro moment. Then it's a little.
Yeah. So then your only limit, Gary, would be if you had a $5,000 account, you trade that every day. So you'd be able to place $5,000 worth of trades in that day. The next day it resets. Whereas that's why they get you on margin anyways, is so that you can reuse money. But you can only do it if you have a $25,000 account. So,
but with the cash, if you tell them you're just going to trade cash, you don't want the margin, then this resolves that problem. So
yeah, and something we don't talk about much is they are charging you for that margin. There's an interest rate that starts ticking the moment you turn on that button. So you're being charged an interest like you would on any loan. And I think Thinkorswim is about 8%.
We should just start calling them loan accounts instead of margin accounts.
Yeah.
It's like your credit card. The balance is going to eat you up. Yep.
That's right. And you have to pay margin back first.
Yes.
Yep. Now think about a loss on margin.
You're locking up, man.
And that's what I want to clarify is the proportionate amount you gain for a gain versus a loss. On margin, if you take a loss on margin, you have to pay the loss, the commission, and then the margin fees, and then pay back those that you didn't originally have in the first place. Not to mention, if you short it, there's extra fees on top of that. So you could be paying like 6 little different streams of income for the broker just for taking one loss on one trade on margin if you're shorting something.
But all this stuff going on with the economy right now is helping our clients, and the reason for that is, like I say, you only need to start off with $2,000. You're never going to put in another penny, right? Well, right now, particularly if you got a kid instead of sending them off to an expensive college, go open up an account, put $2,000. Just make him go out there and get a job where they're going to pay him $2,000-$3,000 on the front just to take the job. And then he works a job a little bit, and then he comes back and just trades. That's where he's got his money already. So no matter what's going on in the world, it benefits our account. Even bad times when people can't hire anybody, they're funding our accounts rather than their accounts. So.
Yeah, absolutely.
Yeah. Hasn't there, with all the money the government has pumped into the economy, retail trading has just skyrocketed.
A friend says, I arrived late. When I joined Trading, is there an additional monthly or weekly cost for the ICE charting service? So we talked about this at the beginning. We make about $5 a month on the charting, but it is quite expensive to get all of the data streams to you. So I'm going to leave the price to the official. It's $124, I want to say. I don't want to misspeak. That is all.
Just go to the website. If you go to the website, try to sign up, you can see the dollar amount there.
Yep, exactly. And that connects you to our advanced charting, our ICE charts for all equities, all ETFs and futures now. There's I mean, more information than you could absorb in a day on that. So it just is a huge resource for a lot of different techniques. And we connect you to that data through our charting and our indicators. Yep.
Yeah.
Absolutely. Thank you for asking.
Yeah, and
Nice,
it's as far as I'm concerned, and I don't make any money off of this. It's a must-have. You know, if you're serious about trading, you want to do this and be professional trader, you've got to have these ice charts. You just have to have them.
You got to look at it, to me, you got to look at it like a business, right? If you're in business of doing this, right, there's going to be some cost, right?
Mm-hmm.
Just as tools that are going to help you be successful. That's all they are.
When Mark explained his new service, and we have a new service. Tim has a new service too. Tim, why don't you talk about yours?
Yeah. About a month and a half ago, we have added individual coaching, one-on-one coaching, and you can get that by going over to micromomenttrading.com and going to go to the coaching section, and at the bottom of that pull-down menu, you'll see one-on-one coaching. And right now, I'm the only one available for coaching. Mark will be on soon. And you'll see at the bottom of that list, Tim says book now. And you can, if you click on that, it'll take you over to, you have a menu. You can choose a half hour or an hour with me. And, we can typically fix identify what's going wrong in your trading, if there's anything, or help you sharpen up your entries and exit points and really answer any questions you have. I've recently had several people picked up some coaching and have improved their trading significantly. So, if you're having any issues with your trading, or you're just starting out, you need a little extra help, we're here to help you. You can pick up that time, and
it's definitely a great way to accelerate your learning curve, and also, like Tim says, to refine your trading so that you can be successful faster.
One other neat thing about Tim's trade is that his is to the background of guitar music.
Yeah.
And so you've got this guitar, and as you get ready to where you're supposed to make the trade, the guitar music gets intense.
That's right.
That's why he's got all those guitars back there on the wall.
That's right. That's right.
And then when it gets really crazy, like on earnings, he gets the B3 out, the keys.
There you go.
Climb up. Yeah.
That's right. You can hardly see anything, in this view, but I've got, keyboards and other amps and other stuff stacked up here. So pick your instrument, but
it's a one-man band. Look out, man.
Yeah.
There's a keyboard on your right hand as well, right?
Yep. Let me see if I can.
Oh, there.
If I can show. Yeah, there it is.
Yeah.
Yep.
Look at that.
Ready.
Whoops. Sorry.
Have you done any trades while we've been on this point, Tim?
No. Apple is. Joe's going to get mad at me for saying this. It's real slow. It's real slow right now. So
what Tim was referring to is the volume, the movement of the tick or the stock itself today. We look for that volume or that movement to take advantage of, right? And at some points and sometimes, it slows down. It's just we're just not able to get in there and eke out a profit, efficiently. So we just stay out.
The reason Tim says that is because they make astronomical returns, like it's, you might say, slow in the traditional sense on the things today, but they still made 20% and 64% for the week. So, because he gets so depressed when he only makes that,
Yeah.
So, yeah.
I do. I've got to take an extra antidepressant.
There you go.
Yeah.
Or I got to call Joe,
There you go.
and complain to him, and Joe will have none of that.
Yeah.
Yeah, it'd probably benefit us to, zoom out more often and see how we're doing over the span of a couple months or weeks. I think that'd be really encouraging. We tend to focus in on that day because that's where we live, right? That's where our trading occurs. We don't hold stocks for 3 months or anything like that in this technique. So it's a little bit, it gets you in the moment a little too much sometimes. It's good to zoom out.
Well, it's a good point, because even with the futures, everything else, you want to look at your weekly gains. You may have a day that's kind of off or something, or during the week, day or two, but then the other days add up. We talk about 60%. Like, for us, that's low. The last couple of weeks we were doing 100 by this time, right?
Yeah.
Or more. So it's all relative, right? So you got to look at the longer picture too. So it plays out well.
Especially over the course of a year. I mean, movement during Christmas time is so much different than July. It's just it's a different beast. Yeah. One thing I want to mention here from a friend, does that come with the 2-week trial? More than the 2-week trial, when you sign up, you have access to the charts of Q, Apple, and SPY, which are, in our opinion, are the best 3 things to trade with the technique anyhow. We share that screen so that you don't even have to buy the ice charts to trade it and to see the indicators, see where they're at. You can actually even zoom in on your webinar screen just to one. You can move around that screen, zoom in and out, and it gives you full charts of those 3 symbols. So you don't have to buy the ice charts. That's just for when people get more advanced and they want to start trading something else, or after we get off, they can get their own copy of the charts and then type in any symbol and it'll come up for them.
Yeah. So Micah, just to clarify that, Micah. So when on the free trial, you're getting those charts anyhow. But also, once the free trial's over, if you subscribe to that service, you're getting that specialized chart. You're not paying extra for it. You're just paying for the service.
Right.
Yeah. For those 3 symbols, you get it for free. And if we ever change one of those symbols, it'll change. But we keep 3 charts up that you can choose from to trade.
And it's during that session, right, in the morning only. So, so the point is, though, if you wanted the charts, I think, so you could trade later on in the day without us being there, then yes, it requires an extra fee to do that. So,
yeah. And the reason that I recommend that everyone have these charts is it's very valuable at the end of the day to go back and look at your trades, see what happened in real time, look at the setup, see what was happening, review your trades every day to see if there's an area that you could have done better. And you can't do that unless you own the charts. So you can see the second by second tick. And I think that's hugely valuable to your success, having the ability to go back and review. But there's one other thing I wanted to add with the changes that we're doing, which we are striving to go to 100% transparency in everything we do, which is a huge differentiator between us and everyone else who's doing this. Each month, we're having an outside accounting firm audit our trades and verifying our trades. And those trades will be emailed to everyone. So
email or post on the website even. So, we can share those, via social media. So, very transparent.
Yeah. So third-party verification is huge. Guaranteed nobody does that.
So it's going to be a good tool that everybody can look at and use.
Absolutely.
Who's Carl here say, right?
Carl says, I know that you use Apple, Q, SPY, and Microsoft. What do you look for in another symbol to trade? Mark or Tim?
And just to add another symbol, I know we do Tesla sometimes, or some of our clients do Tesla as well. Yeah. And just really the overall volume. Apple's the most significant because it does 60 million, Tim? I think it is a day.
Yeah.
You could,
just very thickly traded.
Yeah, you could trade any stock using that technique, but there's no need to when the ones that we're trading are high volume because we're trading volume. We're not trading price appreciation or depreciation. So we don't even worry about that. When we look at the market and they say, oh, the market's down today, hey, that's fine. We just want to be down where there's lots of activity because we're just strictly trading volume. So that's why that you got the Qs there and the SPYs. Microsoft, this is like Apple. It's not going anywhere. It's not going out of business. But past, really big companies that have a lot of volume, we don't mess with like a small, teeny tiny company, that you might otherwise trade as a speculator. So
right.
Yeah, and as you noted, Carl, we do occasionally do Microsoft. We went through a period where we used Microsoft, and it's certainly viable for the same reasons that Mark just mentioned.
And really with the Apple, the Q, SPY here that we have, they're reasonable prices on the options. Like with Tesla, they're $25 per option, right? Which amounts to about, times 100, so $2,500 per contract almost,
Yeah. Yeah, or Apple Bet or Google.
Right. Exactly. So
Um,
these are reasonable ones that we can easily do. Great. As Joe talked about some of this leverage where we're
Yeah.
utilizing the option contract to buy, or control multiple shares of the stock and make our profits every day.
Sometimes Tim will do Apple for less than $1.
yeah.
Yeah.
Yeah, typically come Thursday and Friday, we will dip below $1 on it. Of course, this week running up to earnings today that will report, and we're trading now 2 to 3 in the money. And on the put side, that puts us at $7.30,
Yeah.
which you can trade, but a little bit of account management will tell you how many trades you can actually do at that price. Our sweet spot is $1 to $1.50, and we do that every week.
Yeah.
I think Q is a little more expensive.
Tends to be, yeah. But as the week goes on, like I say, expiration date comes about for the option, the weekly options, right? They start reducing in price. But
Yeah, because we have time decay that goes on every week from the beginning of expiration to the end of expiration, and it's not a straight line. It's a curved line where it's steepest on Thursday and Friday. Come Friday at noon, you see nothing but zeros for the extrinsic value.
Yep. Yeah. One other big reason we trade those things is there is a lot of stability in size, right? So if you're on a little dinghy going fishing and you got a single motor on the back, you're going to be feeling every wave. It's going to hit hard. You're going to be bouncing around. If you're on a cruise ship, you're just standing there, right? Everything's mellow. So that's kind of what we do with, Apple's a cruise ship. Triple Q is literally embodies the entire tech market, SPY, right? They're big entities. So when you're trading those, you're trading the market, right? Things that move it would be like the Fed deciding something. But if you're trading a smaller company, then all the movement, like Joe said, is due to the actual value of that stock going up and down.
Yeah.
If Apple drops $1, it's not that it necessarily got $1 less valuable. It's that the market is moving, and it's a lot easier to read when a cruise ship is turning than when a little boat is turning, right? So that's kind of what we focus on.
okay.
And Carl has a good question. Let's hear what these other guys say about it. Carl says, what do you consider overtrading? I think overtrading is more than an hour a day. An hour a day, and you've made these incredible returns. You might as well walk away.
Yeah, I agree. And for me, most days it's probably even less than that. I try to do 3 to 5 trades a day if the market permits. If I'm doing more than that, then I have to consider, am I chasing something? What's not working that I feel compelled to continue trading? Maybe I'm trying to make up a loss, all those things. But, over trading more than an hour a day, or for me, more than 5 trades a day.
Like today they had 6 trades, and Cezanne didn't have a trade, but Tim had 2 apples, and Mark had 4 Qs. So that's about it. That's about what it runs a day.
Right.
So,
Yeah.
The only other thing that would happen, if you sat there and then try to stay in the market all day long, watching the charts, it just becomes, to me, a never-ending battle because you're getting in sometimes trades you shouldn't be. You're making bad decisions. You want to look for those trends, and typically those morning trends are the best.
Yeah.
Sometimes around noon or 1, there's other ones, and sometimes before market close. So any more than that is just way overkill. So.
Well, look, today they made over 19% on just 6 trades. Mutual funds, and you can go check this out anywhere. They're lucky to make 5 or 6% a year, and these are guys making 19, 20% a day.
And that's not even a day. We're actually in the market for maybe 6 or 7 minutes if you combine
Exactly.
them all, right? The rest of the time we're in cash.
Yeah.
So that's the other beauty of the technique too. We don't carry anything overnight, so we don't have any of this other worries about market gyrations overnight. What happens, earnings, all the stuff that's going on now. We don't care. It doesn't affect us. So
Yeah.
And every now and then, Every now and then God comes down and puts his hand on Mark's head, like last week. Just a fluke. He had 2 huge trades. One I think was 40 and one was 60% for the trade. The market just
it
went
was like
crazy on it.
it was like Thursday or Friday, right? So the fill at $1, which I didn't expect. So I had a really good fill. Then by the time I got out, it was like 40 cents or something. You know?
Yeah.
In those days, you wish you'd done 1,000 contracts instead of 300 or 200.
Yeah.
Absolutely. Yeah, a lot of the mistakes we run into, like overtrading and things like that, really solve themselves if you stick to the baseline rules we have, right? Overtrading doesn't really become an issue if we're not chasing things, if we're not revenge trading because we took a loss, if we're not doing those things. Overtrading very rarely becomes an issue. There's usually something deeper of why you're doing it like that, right? Charles, who's at our Masters, thank you, man. Well, still trading over here and using the techniques. You guys are great.
Yeah, appreciate that.
He says his goal is a 1% gain a day and then head to the beach.
Yeah.
Looks like he understands compound.
Good attitude.
Then what?
Good attitude.
Yeah.
Yep.
Charles, great to hear from you, man. I'm glad you're doing well. That's awesome. Just if you extrapolate that out 1% a day, take that out to 6 months or a year, it's huge. It's huge. Yeah. When you add in the compounding effect, it's incredible. And you say, just 1% a day, but that's over time, that's massive.
Yep.
Yeah. The patience and foresight to be able to see what compounding does, very important. Charles says, Mark, I'll be looking into learning futures as soon as I continue to perfect the micro moment trading.
Yep.
And that'll be a nice springboard. Like we're saying, everybody that's been in micro moment has an extremely unfair advantage in futures. They're the same charts.
The learning curve will be much less, right? So that's the cool part about it. But also futures offer a different dynamic, right? We always talk about these stocks and everything, and there's a different dynamic with the futures where not only can we trade the indices, which is the NASDAQ, the S&P, the Dow or Russell 2000 or something, we can also trade Bitcoin. There's a Bitcoin futures symbol out there, BTC. Yep. And that's something we're looking into doing some more stuff with too. And there's, there's oil, there's gold. So a lot of things can develop from this. So.
Yeah. Right. I mean, we trade Apple and we trade one technique on Apple. We can also trade covered calls on Apple. We can do a lot of different things. You can pull a TSS on a covered call on Apple. It's all one tool, but you can use the tool in a lot of different ways. It's like a more of a Leatherman than a hammer. Charles says, Joe, FYI, don't forget your signed book copy to me. Do we owe something here that has not been paid yet?
I'll try. I'm going on third time now. I'm not going to let 3 times happen. Twice now, I promise. He came to our to our last big meeting here a couple months ago in Fort Worth, and he came. And I told him I'll have the book there. And when we moved our offices, everything went into storage, and including all the boxes of those books. And I just have not gotten out there to get it. But Charles, I will. Don't worry.
You did have a problem, broke your leg, so you did have an excuse for a little while.
Well, yeah, exactly. Yeah, I hadn't been out of our house. I'm captive. Every now and then, Mark comes by and picks me up and takes me out somewhere. That's a big thing.
Distracted.
That's right.
Hey guys, I hate to do this. I've got to jump off the call.
Yeah,
okay.
Well, good. We appreciate you being here, man.
My
great show today. Great show.
Thank you. My pleasure. I'll talk to you guys tomorrow.
All right. Charles is giving you a hard time. Yeah, maybe the solution would be a shipping address to support at micro moment trading. Does that sound good, Joe?
Yeah, I could go there and get them out of the warehouse.
Yep. Yeah.
I don't even know where the warehouse is. Everybody knows except me. I didn't take anything over there, and I got to get them over there. So
moved it all around on you. Absolutely.
Yeah, Charles, don't give up on me. So,
we'll get it
all right, Charles, go ahead and send your shipping address, and when we get around to that, we'll send it to that email below, and we'll get that to you.
Yeah.
Or you can go to Amazon, but then you have to pay for it. I don't want you to pay for it. So when we've had black marketing in the book not too long ago. Some client called me and said, you got to go to Amazon and look at your book. They were selling it for like $200 or $300. It only costs, buying it normal the price, $50 or $60.
It's retail,
Never-
normal retail, yeah.
It's out there selling it used. You know, they must have had like formulas in there, their own formulas in the book or something.
That the supply dropped and everybody realized what they had, I guess.
Yeah.
Exactly.
Fantastic. If everybody in here would be willing to click the like button really quick. I never ask for that. I'm going to start asking for it. It makes a huge difference in what we do here. We just want to help you guys get as much knowledge as possible. So if you're on YouTube or Facebook, just follow along with Charles and click that like. I would really appreciate it. But fantastic. Hope you got that addressed, Charles. Thank you for all the questions and comments today, guys. If anyone has anything else we can answer before we hop off here, just drop it in.
But hey, let me say one thing. Randy's normally here, and so many people, had so many clients are Randy's clients, and we figure he's gone crazy because he's a big baseball player, and he had two weeks in a row he couldn't be here because he had baseball games on a Thursday, and now with the World Series going on, I figure he's just gone berserk, and he's probably wherever they're playing the World Series. In Austin, San Antonio, or wherever it is, Austin, or wherever.
Yep.
In Houston and Atlanta, I guess now. So, anyhow, he even got on big screen TV. He's been totally obnoxious since he got on big screen TV. So,
Yeah, it's gone to his head.
yeah.
Yep. Doris says excellent review today. Yeah, covered quite a bit. I appreciate you being here, Doris.
For sure.
Charles says, also, I've been using the techniques of MMT on Apple, Facebook, QQQ, and Spy.
Oh, nice.
Fantastic.
Yeah. Once you get into MMT, it's this cool thing. You can start to learn the personality because we just trade one thing. I mean, we have people that trade. They've picked Apple and traded it for the last 2 years, nothing else. Right. You start to know how different, they're not much different from each other on the charts, but they have little things that make it even more reliable. You get to know the personality of Apple, of Spy, and we make jokes about, what they're like, and their little differences. But yeah, you can certainly get used to those.
Definitely.
Techniques work on all the dogs of the Dow, basically. Yep. Yeah, I would say so.
All right.
So for anybody that wasn't here, Mark, if you want to give a 30-second of your futures plans coming up this week.
Yeah, so in the market today, we're going to send the email notice to start the futures or kick it off for our live trading room. So look for that. And then we have the charting available already on the site. If you want to sign up for that, you can go to, if you have existing charting, go to manage account, you can add it. Or if you need, you can click on futures, add it to your sign out there, or what do you call it, shopping cart, so that you can have the future charting so you can trade anytime you want. But anyway, that should be a great thing next week for us to kick that off. We're really excited about it. I'm excited about it, and I look forward to seeing you all there.
Well, if you live in Fort Worth, always look for Mark's cash option Cowmobile, whatever it is that he trades. He drives around, people get in the car.
Like my truck, right? So I'm gonna put some lights in like that cash cab thing, and we'll do that.
Fantastic. Eric trades Microsoft. We haven't done Microsoft on that show in a while.
No, we used to.
Yeah, it ought to be fine. It moves, obviously.
Yep. We can't put them all up there. So the three we put up there allow us to show those three basic ones, which are great.
Yeah, exactly. Charles said, should I ask Sue Ann for the charting futures?
You can ask her, if you prefer.
Yeah, absolutely. That same address I put up earlier if you have any questions on any of the services, charting, anything like that. Sue Ann is fantastic with
She's our guru, for sure, back there. So.
Oh yeah, incredible. So fantastic.
We couldn't do what we do without her, so that's perfect. So we appreciate her being here.
That's very true. Well, thank you for being here, guys. We can close it on down. Thank you for everybody for all your comments.
Bye-bye.
Again, give us a like if you are able, and take a look at us on any Instagram, Facebook, LinkedIn, YouTube, Twitter, TikTok are all the things we are on. So if you have any questions about how we do things, check out the videos. See you later, Mark. Appreciate you. Any questions on how we do any of the techniques? There's a lot of video examples on TikTok specifically. We take those to Facebook. And then we're doing some new teaching things on Instagram as well. We're going over a lot of the basic terminology. what an option is, how it works, what a put is, a call is, and really breaking those down, giving literal examples with them, so you can understand them in a practical sense, right? You can look up the definition, but what does it actually mean? How does that actually function and work and move? What makes a stock go from 100 to 101? What actually occurs to change the price? So we want to go over those basic things and give people a baseline understanding, even if they don't trade, of how the market works. So we're going to keep doing that, and we will see you guys next week, Thursday at 10 a.m. Appreciate y'all.